Welcome to EduTap and welcome to today's Finance 360-degree session. So in today's session, I'm going to discuss with you three very important topics that are from the finance current affairs, okay? And these topics, they are very important for your phase 2 of the RBI Grade B examination. First of all, I hope you know that in the RBI Grade B 2025 phase 2 examination, there were around 4 questions of 2 marks each from the finance current affairs, and there was one question of 1 mark. So 4 questions of 2 mark and 1 question of 1 mark, that means in total 9 marks were from the finance current affairs. Okay, so there were 9 marks from the finance current affairs. Now in 2024 also, not only in 2025, in 2024 also we have seen this pattern that there were number of questions from the finance current affairs, from the SEBI articles, okay, and such. So basically the finance current affairs, they are important from the examination perspective, and in today's session we are going to discuss the 3 important finance current affairs. That is, the BSE launches India's first Satwik index, BSE Satwik 100. So this is the India's first Satwik index. What is the Satwik index? What is the BSE 100? What is the base value? What is the base year? All of this we are going to discuss, okay? Then we will discuss India-Nepal launch cross-border remittance mechanism, and at last we will discuss about Sabka Bima Sabki Raksha Act 2025. So all of these we are going to discuss in today's session, okay? So let's get started. Now you will get the PDF of the session in the Telegram channel of EduTap, okay? So in the Telegram channel of EduTap, you can download the PDF. You can get the PDF of the session in the Telegram channel of EduTap. And this session is very important for you to understand that, okay, what are the important terminologies that you have to remember? What are the important data points that you can remember from the RBI Grade B 2026 phase 2 examination, okay? So for the RBI Grade B 2026 phase 2 examination, this session is going to be important. As well as if you are preparing for 2027, then here you will learn new terms that are important from the examination perspective. Chalo. So we are starting with the first article, that is the BSE, the Bombay Stock Exchange has launched India's first Satwik index. Whenever there is India's first, that becomes important, okay? So this is the first Satwik index, BSE Satwik 100. So BSE Limited, through its subsidiary BSE Index Services Private Limited, launched India's first Satwik themed stock market index, that is the BSE Satwik 100 index. What is the index? Let's say BSE 500 index. BSE 500 index. It consists of the top 500 companies listed on the Bombay Stock Exchange. So the top 500 companies in terms of their market valuation, in terms of their liquidity, they are the top 500 companies that are listed on the Bombay Stock Exchange. Like the Bank Nifty consists of the banks, the top banks, okay, that are listed on the stock exchange, as well as they are traded on the stock exchange. Similarly, so basically the index, it shows certain shares or certain companies that are listed as well as they are traded, and here BSE 500 index shows the top 500 companies that are listed on the Bombay Stock Exchange and they are traded massively. So this is the idea. So the BSE Satwik 100 index. First of all, Satwik means what? The concept of Satwik originates from the Indian philosophical traditions, meaning purity, balance, truth, harmony. There is also something known as ESG, that is environmental, social and governance. So these are different principles. These are different principles than the Satwik principles. Satwik principles are more philosophical in nature. They are based on the values such as purity, balance, truth and harmony, okay? So basically this BSE Satwik 100 index, it does not depend on the other factors. It only depends on the Satwik meaning, okay? So the concept of Satwik originates from the Indian philosophical traditions. So now the BSE Index Services Private Limited, that is the subsidiary of the BSE Limited, has launched India's first Satwik themed stock market index. Now the index is derived from the constituents of the BSE 500 index, that is from the top 500 companies. There are 100 companies that are chosen, that are selected, that are following the Satwik principles, the principles of balance, truth, harmony, okay? So out of the top 500 companies, that in terms of their market valuation, in terms of their liquidity, that are listed on the Bombay Stock Exchange. Out of the top 500 companies, there are the 100 companies that are selected to be included in the BSE Satvic 100 index on the basis of their Satvic principles. The index has been created for investors who want their investment decision to align with ethical, cultural, and value-based principles rather than focusing only on the financial returns. Okay, so this is the idea. I hope this is very much clear. Now, the key features of the Bombay Stock Exchange Satvic 100 Index. So, the index name is BSE Satvic 100. It consists of 100 companies. And the parent universe is the BSE 500. That is, out of the 500 companies, out of the 500 top companies, the 100 companies are chosen to be included in the BSE Satvic Index on the basis of their Satvic followings, okay, or the Satvic principles that they are following. Launch year. So the BSE Satvic 100 Index has been launched in 2026. The base value, it is important, the base value is 1000. Like when we are doing the digital payment index, the digital payment index is the index of the Reserve Bank of India to show us the deepening and the penetration of the digital payment. It has a base year. What is the base year, if anyone can tell me? What is the base year of digital payment index? It is March 2018. And what is the base value? It is 100. So against the base value, all the other years, all the other values are compared, okay? And the base year is March 2018. So if we have the data for March 2026, it can be compared against the base value, that is 100. That is for the March 2018. Okay. Similarly, here for the BSE Satvic 100 Index, the base value is 1000 and the base date is 20 June 2005. So 2005 is the base year, basically. Base date is 20 June 2005. So always the base value and the base year, they are very important. Base value 1000, base year 2005. Now rebalancing or reconstitution, that means like after every how many months the recalibration and the reconstitution of this index will happen. That again and again it has to be seen that the 100 companies that are in the Satvic index, are they following the principles or are they not? And are there any new companies that are following more principles? Okay, so rebalancing or reconstitution of this index will happen twice a year, that is in June and December. The purpose of this index is to provide the ethical and value-based investing benchmark. There are many of the investors that are interested in investing their money in such companies that are following the Satvic principles. Okay, so to provide them the index, this is here. Larger sector weight. So the financial services, banks, NBFCs, financial institutions, they form a significant part of the index. Now, how are companies selected for the BSE Satvic 100 index? Let's see. So start with BSE 500. Companies are first chosen from the BSE 500, which includes India's largest and most actively traded listed companies. The 500 most actively traded listed companies, the India's largest listed companies. Then apply Satvic screening. Companies are checked against Satvic, that is ethical and value-based principles. Businesses involved in activities considered inconsistent with these principles are basically excluded. So if a company is following the Satvic principles, ethical and value-based principles, then only those companies will be included under Satvic. Okay? Eligibility check, only companies meeting the required ethical and financial criteria and the value-based criteria move to the next stage, and final selection is the best 100 eligible companies are selected to form the BSE Satvic 100 index. Periodic review happens, and twice a year, June and December, there is the reconstitution of the index. So this is all about the BSE Satvic 100 index. It is based on the Satvic principles. What are the Satvic principles? The ethical and value-based principles, that is the harmony, trust and balance. So these are the Satvic principles. The base value is 1000. The base year is 2005. The recalibration or the reconstitution happens twice a year, June and December. That's it. Okay. Chalo. Next is India Nepal launch cross-border remittance mechanism. So India and Nepal have launched the peer-to-peer, that is person-to-person cross-border remittance mechanism, so that the Indian person can send the money to the Nepali person and the Nepalese person can send the money to Indian person. Okay? So India and Nepal, they have launched person to person, that is peer to peer cross border remittance mechanism, so that easily the money can be sent by person to person in between India and Nepal. Okay? By linking India's UPI with Nepal's national payment interface. So basically the India's unified payment interface, that is India's UPI, has been connected or has been linked with Nepal's national payment interface, so that with this linkage the person to person peer to peer cross border remittance becomes easy. Okay? So let's say there is someone that is living in Nepal. Now they want to send the money in India to a relative. Or let's say in India, there is some relative that is living that want to send the money to the Nepalese person. So basically the person to person transactions become easy. The person to person remittance becomes easy with this mechanism, with this linkage between UPI and the NPI. The system enables instant, secure, real-time money transfers between individuals in both the countries through mobile banking apps and digital wallets. Now, the implementing agencies or the technical partners that have enabled the UPI to be linked with the NPI or the NPI to be linked with UPI. So the technical partners, the implementing agencies are NPCI International Payment Limited, that is NIPL, that is the international arm of NPCI, and Nepal Clearing House Limited. Okay. So this is the idea. Now, person-to-person cross-border remittance mechanism is a system that allows individuals in one country to send money directly to individuals in another country through digital payment platforms. So let's say sender is of India, they can use their UPI app and with the UPI NPI linkage, the money can be sent to the recipient in Nepal. Or let's say the sender is in Nepal. With the NPI, Nepalese people, they are using the NPI enabled app, so they can use this NPI UPI linkage to send the money to the recipient in India. So basically the person to person remittances becomes very easy. Now coming to the last topic, any confusion till now, anyone? Any confusion? Person to person remittances. Okay. Let's proceed if there is no confusion. Sabka Bima Sabki Raksha. See what has recently happened, that in June it was discussed that the IRDI, that is Insurance Regulatory and Development Authority of India, has proposed allowing insurance companies to merge with non-insurance entities while ensuring policyholder protection and financial stability. So basically IRDI has proposed allowing the insurance companies to be merged with the non-insurance entities. So this is under the Sabka Bima Sabki Raksha Amendment of Insurance Laws Act 2025. So first we have to understand that what is the Sabka Bima Sabki Raksha Amendment of Insurance Law Act 2025. Then we will understand that okay, what is the proposal basically. Okay. Now why this is important, why we are discussing this, because this was mentioned in the Financial Stability Report also under the domestic financial regulator initiatives. So there are different initiatives that have been taken by the Reserve Bank of India. There are different initiatives that have been taken by the SEBI. There are different initiatives taken by the IRDI. So Sabka Bima Sabki Raksha, it has been mentioned in the Financial Stability Report also. Okay? For the development and expansion of the insurance segment. So this Sabka Bima Sabki Raksha, let's understand this. First of all, Sabka Bima Sabki Raksha Amendment of Insurance Laws Act 2025. This is a major insurance sector reform. That's why it was mentioned in the Financial Stability Report also. So Sabka Bima Sabki Raksha, this is a major insurance sector reform aimed at expanding the insurance coverage, attracting investment and simplifying regulations to achieve the vision of insurance for all by 2047. So it was introduced in the Lok Sabha. So the bill Sabka Bima Sabki Raksha, this bill was introduced in Lok Sabha in December 2025. Then it was passed from the Lok Sabha on the same day. Then it was passed from the Rajya Sabha by the next day, and it got the assent, it got the approval of the president on the 20th December 2025, and this bill became the act with the permission, with the approval of the parliament, and with the assent of the president, this bill became the act, that is the Sabka Bima Sabki Raksha Act. Okay, so Sabka Bima Sabki Raksha, Amendment of Insurance Laws Act 2025. Now, the parliament has passed it, and it came into effect from February 5, 2026, in when the IRDI amended the acts. Okay, so the act brings major changes to three. So the act, that is Sabka Bima Sabki Raksha, this act brings major changes to three key insurance laws in India. These are the acts that were amended, and the IRDI, it amended the acts under the Sabka Bima Sabki Raksha. Okay, so Insurance Act 1938 was amended as per the Sabka Bima Sabki Raksha. The LIC Act 1956 and the IRDA Act 1999, these were amended. Okay, key amendments of the act. So Sabka Bima Sabki Raksha, under this, what are the major changes or what are the major amendments that have been brought? So increase the FDI limit in insurance from 74% to 100%. This was in news in the past months. A lot of time we have heard this, that there is the FDI limit that is increased for the FDI limit has been increased for the insurance companies from 74% to 100%. Okay, so there is the increase in the foreign direct investment limit from 74% to 100%. That means FDI through the automatic route, the FDI is allowed 100% in the insurance companies. For the LIC, the FDI limit through the automatic route is 20%. But for all the other insurance companies, the FDI limit has been increased from 74% to 100%. So remember this, that the FDI, the foreign direct investment, through the automatic route, before it was allowed 74%, but now for the insurance companies it is allowed 100%. That means 100% of the FDI can come through the automatic route. But for the LIC, only for the LIC, this 100% of the limit is not applicable. The FDI through the automatic route can only come up to 20% in the LIC. Okay, so this is the idea. Net owned fund requirement of foreign reinsurance branches. So see, net owned fund, this is the minimum capital that a company should have to remain stable, to be able to function properly. So net owned fund requirement of foreign reinsurance branches. So reinsurance means that a company has provided insurance to XYZ, and the company, to reduce its risk, it is taking reinsurance. It is taking insurance for itself. So that is reinsurance. So foreign reinsurance branches, they needed to have the net owned fund of 5,000 crore. Now the limit has been reduced to 1,000 crore. So net owned fund requirement, the minimum net owned fund requirement has been reduced for the foreign reinsurance branches from 5,000 crore to only 1,000 crores, so that more foreign reinsurance branches can open in the country. Okay, and the net owned fund requirement has been reduced for the foreign reinsurance branches from 5,000 crore to 1,000 crore only. The net owned fund is the minimum capital a reinsurance company must hold to ensure it can pay the claims and stay financially stable and can function properly. Net owned fund is the actual owned fund of the company that consists of paid up equity capital, that is the shareholders' capital. The shareholders, they have given the money to the company to get the shares of the company. So this is the money that has gone to the company, or that is the money of the company. The free reserves, this is the part of the profit that the company is keeping with itself. So the free reserves, the balance in share premium account, some of the shares are sold at the higher price. So whatever is the premium amount, that is included here. The capital reserves made up of surplus arising out of sale proceeds. So let's say the company has sold some assets, and from the sale of the assets, there are some surplus that has come. So that comes under capital reserves. So all of this is the owned fund of the company, that is owned by the company. So the company before needed to have the net owned fund of 5,000 crore, which is reduced. The requirement is reduced to 1,000 crore for the foreign reinsurance branches. Under the 1938 Act, a public company in the insurance business is allowed to register the transfer of its shares only after the approval of the IRDI, that is Insurance Regulatory and Development Authority of India, where the value of the shares to be transferred exceed 1%. So basically, a public company in the insurance business was allowed to transfer the shares and allowed to register the transfer of shares only with the approval of IRDI if the transfer was more than 1% of the paid up share capital. Now this limit has been increased from 1% to 5%. That means if the transfer of the shares is more than 5%, then the approval has to be taken from the IRDI. I hope this is very much clear. Now, the LIC has been provided with the autonomy to open the zonal offices in the country and to align its foreign offices with the laws and regulations of their respective jurisdiction. So, the overseas branches of the LIC have to follow the host jurisdiction rules and regulations. So, the foreign offices of the LIC with the laws and regulations have to follow the laws and regulations of their respective jurisdiction. Now, to protect the interest of the policyholders and for education of policyholders, a dedicated fund, namely Policyholders Education and Protection Fund, will be set up to spread awareness about insurance. Like there is the RBI, under the RBI there is Depositor Education and Awareness Fund. Under the under the Companies Act, there is the Investor Education and Protection Fund. Under the Investor Education Protection Fund Authority, there is the Investor Education and Protection Fund. Okay? So such funds are there. The Depositor Education and Awareness Fund, Investor Education and Protection Fund. Now the IRDI, like as per the Sabka Bima, Sabki Raksha Act, to protect the interest of the policyholders, to protect the interest of the customers in the insurance segment, and for education of policyholders, a dedicated fund, namely Policyholders Education and Protection Fund, will be set up to spread awareness about insurance. The fund will be utilized to protect the interest of policyholders and educate them. It will be funded by donations or grants from the central government, state governments, IRDI and companies or any other institution. Sums received as penalties by the IRDI and any other sum specified by the regulations. As well as there was another thing. So I hope this is also clear that the IRDI is also launching its Policyholders Education and Protection Fund. So this fund will come under IRDI. Now coming to the last point, so in the act it was written in the Sabka Bima Sabki Raksha Act, notwithstanding, that is in spite of anything contained in any other law for the time being in force, no insurance business of an insurer or non-insurance business of any company shall be transferred to or amalgamated with the insurance business. So insurance business or the non-insurance business, they cannot be amalgamated in the insurance business of any other insurer except in accordance with the scheme prepared under the section and approved by the authority. So basically, if the insurance business has to be amalgamated, has to be merged, has to be taken over by the another or has to be transferred to the another insurance business, or the non-insurance business has to be transferred or amalgamated with the insurance business, so IRDI needs to prepare a set of rules and regulations, set of procedures. So a scheme has to be prepared by the authority, by the IRDI, and approval is required from the IRDI. So basically, insurance business, they can transfer to another insurance business, they can amalgamate with another insurance business. Non-insurance business also, that means non-insurance companies also, they can transfer to or they can amalgamate with the insurance business, but it should be as per the rules and regulations set by the IRDI. It should be as per the approval from the IRDI. This is the idea. And under this particular segment of the Sabka Bima Sabki Raksha, where it has been said that yes, with the approval of the IRDI, with the rules and regulations set by the IRDI, non-insurance business can also get transferred to or can also amalgamate with the insurance business. That's why this proposal has been recently launched. Okay? So IRDI in its proposal announced the amalgamation framework. So Sabka Bima Sabki Raksha Act enables amalgamation of insurance companies with non-insurance companies. Accordingly, a regulatory framework is proposed covering eligible non-insurance entities, conditions of amalgamation, manner of payment of consideration, post-amalgamation safeguards that have to be taken, and measures for protection of policyholder interest. So basically, the IRDI has proposed the set of rules and regulations through which the amalgamation can happen between the insurance company and the non-insurance company. So IRDI has proposed allowing the insurance companies to merge with non-insurance entities while ensuring policyholder protection and financial stability. And because of this being in news in June 2026, that the proposal has been given by the IRDI, the Sabka Bima Sabki Raksha was also in news. And this we have discussed the most important point from the Sabka Bima Sabki Raksha we have discussed. Okay. Any confusion, anyone? Now, India is currently the 10th largest insurance market globally and second largest among the emerging markets. India is the fifth largest life insurance market globally, while India is currently the fourth largest general insurance market in Asia and 14th largest globally. As per the Swiss Re report that is also recognized by the IRDI, India is expected to become the sixth largest insurance market by 2032. So these were the three articles that we have discussed. Now this is the first question. I hope you will be easily able to answer this question. Any confusion, anyone? Any confusion in any of the article? So which of the following correctly describes the base value and base date of the BSE Satvik 100 index? Okay. Next is, which pair of institutions has implemented the India-Nepal person-to-person, peer-to-peer cross-border remittance mechanism? So which pair of institutions they have implemented? They are the technical partners. They have provided the technical capacity for the India-Nepal person-to-person cross-border remittance mechanism. So try to answer this. The last one is that under the Sabka Bima Sabki Raksha Amendment of Insurance Laws Act 2025, prior approval of the insurance regulator is required for transfer of shares exceeding what percentage of the insurer's paid up share capital? So, transfer of shares exceeding what percentage of insurance companies paid up share capital requires the prior approval of the insurance regulator? This is the question that you have to answer. Okay. So, this is it for today. I hope you enjoyed the session and you will get the PDF of the session in the Telegram channel of EduTap. If you have any confusion, you can write down in the comment section below and do give me the right answer of the homework questions. Okay. So, this